Hi everyone, this is Nick Carlisle with Realty One Group. It's time again for our monthly market update, and we're about halfway through the year, so I thought I would put a little bit of a broader scope on this and make this more of a mid-year review. Not much has changed since the stats I gave you last month. We're still in a seller's market here in Phoenix, which means homes are selling faster and for more money than they were last year. Prices are continuing to rise as buyers are competing for the relatively low amount of homes for sale. A great example of this is I helped one of my clients write an offer on a property just last week that had 10 other offers. So with prices continuing to rise and in some places hitting or surpassing our peak pricing back in the mid-2000s, a lot of people are wondering if we are poised for another imminent crash. I get asked all the time if I think that we're in a housing bubble or if the crash is going to happen soon. Really, the most effective way to answer this is let's take a look at what happened about 10 years ago that caused that huge catastrophe. And one of the biggest factors was the introduction of the subprime mortgage market. And basically there was such a huge demand for loans, mortgages, and houses that lenders started giving loans to people who absolutely should not have gotten them. This introduced very predatory lender tactics such as interest-only loans, where the buyer could afford the mortgage payment for a few years because they were only paying interest, but then once the full payment kicked in a few years later, they couldn't afford it, they ended up defaulting on the loan, and their home would get foreclosed on. Lending practices like these led to the 3 million foreclosures that we saw in 2010. Now these foreclosures flooded the real estate market, causing prices to plummet as the few qualified buyers that were out there couldn't pick up all of these new homes and this new inventory coming in. Well, things finally leveled out after a couple years, and only now are we nearly fully recovered. And you might say, well, Nick, prices are just as high, if not higher, than back then, so doesn't that mean that there's an imminent crash? Well, there's a lot of factors in play here, and price is only one factor that can indicate whether a crash is imminent or not. So let's look at what's different now compared to back then. Now, the government figured out what happened pretty quickly, and they took immediate actions to make sure safety measures were in place so that it didn't happen again. One example of this is credit and income requirements were greatly tightened. So what that means is our current market is built on a foundation of good loans given to people that can afford their full mortgage payment. We can also see that our market is healthier by looking at the number of foreclosures. We had 600,000 foreclosures in 2017. There's a 12-year low compared to the 3 million foreclosures we saw in 2010. That's about an 80% reduction. So we can see that we simply don't have the same factors in play now that we did 10 years ago that brought upon the crash. Now, the real estate market is absolutely cyclical, and prices are going to continue to ebb and flow based on a great many factors. But don't confuse our relatively healthy market for a market on the edge of collapse just because prices are about the same. The bottom line is most experts agree that we're in a much better position now than we were 10 years ago. And though the market may dip in a few places across the country, it won't be nearly as bad or on the same scale as that infamous crash. As always, if you found this video helpful or you think others may benefit from watching, please like and share this video. And if you think now might be the right time for you to move, or you just have some questions in regards to real estate, please get in touch with me. My goal in real estate is to serve, educate, and love my clients throughout the real estate process. So if you know someone who's looking to buy or sell a home, please consider letting them know that I would be delighted to serve them. And as always, thanks so much for watching.